Welcome to today's video. Today we'll be talking about candlestick pattern. When you go to every community, there are languages that people speak. And if you don't understand this language, you'll be fine as a stranger. So when it comes to the forex market, there are languages that each candle, when formed on the forex market, speaks. So today we'll be looking at the meaning of each candle that forms when you look at your chart. So I made a list of some of the major ones that I want us to look at in today's video. So the first one I will be looking at is the engulfing bar. Engulfing bar. Also look at Doji. So look at Dragonfly Doji. Also talk about Gravestone Doji. And also talk about hammer or pin bar. Finally, we will look at tweezer top and tweezer bottom. But before we continue or before we dive into this video, please just take 2 seconds and click on the red button, the subscribe button. If this is your first time of coming to my channel, please do me that favor by hitting the subscribe button. Remember, when you subscribe, it will not take anything away from you. So please, all you can do for me is just by hitting that subscribe button for this community to grow. Remember to hit the bell icon as well to get notified when I upload the next video. Thank you very much for subscribing to the channel. Well, now let's continue. So we will start with the engulfing bar or the bullish engulfing bar. Now the engulfing bar, we have the bearish and the bullish. In the forex market, remember our previous video, we talked about bullish market and the bearish market. So we have the bullish engulfing bar. When you talk about the bullish engulfing bar, it consists of 2 candlesticks. The first one is a small bearish candle body, and the second is a bullish engulfing candle. Now, the bullish engulfing bar pattern indicates that the market is no longer under control of sellers, and buyers will take control of the market. It does not necessarily mean that buyers has taken control, but it indicates or it's telling you that buyers will take control or may take control of the market when it forms in the context of an uptrend. Bullish market, meaning the market is moving to the upside. So they are saying that when it forms in the context of an uptrend, it indicates a continuation signal to the upside. So when you are looking at your chart and you see a bullish engulfing bar in an uptrend market, it's giving you more signal that the market may continue to the upside. Now, when it forms at the end of a downtrend, it indicates potential reversal of the downtrend. Remember, the key word here is potential reversal. It does not necessarily mean that the market will reverse at this point, but it's giving you a signal that the market may reverse. So there are other confluences that you have to look out for before taking a trade. You don't just have to base it on the bullish engulfing bar. So now let's look at the image of a bullish engulfing bar. Actually, I take this picture separate from the chart so that we look at it how it's open and closes. Now the first point that we look at is the first candle body is what? Small bearish candle. So the first candle that we are looking at is this small bearish candle. And the second one, which is the engulfing or the bullish engulfing, is this one. Now remember, what you have to look out for is that you look at this candle, the open and the close of this candle. And when you look at the bullish candle, you see that it closed above the previous candle's high. It closed above. So the body of this bullish engulfing should close above the previous bearish candle. That will constitute a bullish engulfing candle. Take that into consideration. It's very, very important. You don't just have to look at the candle and see it's bullish engulfing. You have to look at where it's open and how this one closed above it. So with this information, telling you that the buyers are taking or has taken control of the market. Now let's move on to the next one, which is the bearish engulfing. Bearish engulfing. But before we do that, we look at that one. Let's look at the charts and see or try to identify some of these bullish engulfing candlestick pattern. So looking at this, you see we have one over here, which you can clearly see that the bearish candle, the market here was moving to the downside. Remember, I took this picture from the 4-hour chart, and the time frame that these candlesticks are formed constitute the strength of the pattern. So when you look at these patterns at the daily and the 4-hour or the weekly, they have more strength as compared to when you look at them on the lower time frame, which is the 5 minutes, 1 minute, and the 15 minutes. A 4-hour engulfing candlestick pattern is very powerful as compared to a 15 minutes engulfing candlestick pattern. Remember, in our previous video, I told you that the time frame that you trade or you make your analysis matters the most. So you have to look at the time frame that you are working with. This chart has been taken from a 4-hour chart. So looking at the first one, you can see that the body of this one, the market was coming to the downside, and all of a sudden we have engulfing the whole market. Look at the whole market was coming to the downside, and all of a sudden we have an engulfing candle here. Engulfing candle. You see, we have a candle here, right? That look like an engulfing candle, but I wouldn't consider this as an engulfing candle because looking at this, it's quite not convincing that this market will reject over here. But looking at this huge momentum over here, could confirm that probably we are going to move to the upside, and behold, we've been able to move to the upside. And when you come here looking at this, the market was coming to the downside as well. And before we realize we have a bullish and engulfing candle, and the market moved to the upside. Remember, one of the points is that when you see bullish engulfing in an uptrend, so already we are moving to the downside. The whole picture, we are moving to the upside. So we see a bullish engulfing candle in an uptrend, meaning we have a continuation signal to the upside. We have a continuation signal to the upside. So the major things that you have to note over here that the time frame that you are making your analysis matters. The time frame that you are doing your analysis matters. So now let's look at the bearish engulfing pattern. Now, it also consists of two candlesticks. The first one is small bullish body, and the second is the bearish engulfing. So everything that we look at on the bullish candlestick pattern is the opposite of the bearish. So we have a bearish engulfing bar pattern indicates the market is no longer under control of buyers, and small under control of buyers, and sellers will take control of the market. When it forms in the context of an up, context of a downtrend, it indicates a continuation signal to the down, just like in the other version that we look at. Now, when it forms at the end of an uptrend, it indicates potential reversal of the uptrend. Now let's look at the example. Now, you see, this body also closes strongly below the wick of this candle. Both open almost at the same points, and the bearish candle, which is the engulfing candle, closes strongly below the wick of this one. So remember, always consider the wick of the previous candle. Consider the wick, or even if you not consider the wick, consider the body size of This one, the body of the engulfing bar should totally engulf the previous candle. Should totally engulf the previous candle. Now let's look at some example, or let's look at the chart and see some examples. Now, as you can see clearly, we have here bearish engulfing. The market was moving to the upside. All of a sudden, we started seeing a rejection, and we have an engulfing candlestick here. You can see that the body closed below the low of the previous candle, forming an engulfing candle. You see this candle here, we cannot consider this as what? An engulfing candle, because the body of the previous candle is bigger than this one. So the black candle or the bearish candle has not engulfed this one. But when you come to this one, you see that it engulfs it a little. It engulfs it a little. With this one, you can consider them when the market is trending in the same direction. You will see that as the market rejects over here, we are moving to the downside. So with this one, you can probably consider this as a retest of the previous low. But we are not looking at a test or a market structure here. We are looking at candlestick pattern. So when the market is moving to the downside, all of a sudden it started moving to the upside for a while. Then all of a sudden we have an engulfing candle here. Downside, we have an engulfing candle here, and it continues. So you just have to be very careful when you spot them out on your chart. It's very, very important. If you are unable to spot them, you may not be able to trade or understand what the market is saying at a point in time. Now let's look at the Doji candlestick pattern. This candlestick pattern, when formed, indicates that the market opens and closes at the same price, which means there is equality or indecision between buyers and sellers in the market. There's indecision, meaning the market opens and closes at the same price level. No one is in control of the market. Neither the buyers nor sellers are in control. They are indecision in the market. Now, this is an image of a doji candlestick pattern. Remember, one thing I have to note over here, the color of the body does not necessarily matter. The color of the candlestick does not necessarily matter. What matters is the open and the close of the market. So with looking at this, you could see that we have little but no body, opens here and closes here, leaving the wicks behind. Now let's look at the Dragonfly Doji. When you talk about Dragonfly Doji, it's a bullish. They're saying that it's a bullish candlestick pattern, which is formed when the open and close are the same or about the same price. When the open and close are the same or about the same price, its longer lower tail shows the support of buyers and their attempt to push the market up. Now, this is all they are talking about. The Dragonfly Doji. This is all that they are talking about. There is a bullish candlestick pattern which is formed when the open and close are the same. Remember, Doji, we know that the open and close are the same. And the second point is telling us the long lower tail. This long lower tail here, this long lower tail shows the support of buyers and their attempt to push the market up. So when this market open, it moves all the way to the downside, and all of a sudden, buyers push the market back to the upside, giving us a Dragonfly Doji. So this candlestick simply is informing us that buyers are about to take control of the market. Now let's look at the opposite version of it, which is the Gravestone Doji. It's a bullish candlestick pattern. Sorry, it's a bearish candlestick pattern. The other one is bullish. This one is a bearish candlestick pattern, which is formed when the open and close are the same or about the same price. So it is the opposite of Dragonfly Doji. Now, the second point is its long upper tail shows the resistance of sellers and their attempt to push the market down. So it's just the opposite version of the dragonfly. So what you have to look out for is the wick or the tail. The tail is lifted to the upside. So when the markets open, you see that buyers were able to push the markets all the way to the upside. And all of a sudden, sellers came in and pushed the market back to the open. So that is it about Gravestone Doji. Remember, when it forms in an uptrend, it indicates potential return or reversal of the market. And when it forms in a downtrend, it indicates a potential continuation to the downside. Now let's look at hammer or a pin bar, but we'll start with the bullish pin bar. We have the bullish pin bar and the bearish pin bar. So when you talk about the bullish pin bar, this candlestick pattern is formed by a long lower shadow or wick with small body at the upper side, indicating a bullish rejection from buyers and their intention to push the market higher. Now, it is a reversal candlestick pattern when it occurs or formed at the bottom of a downtrend. So they are telling us that the pin bar or the hammer, the bullish hammer, when it formed at the bottom of a downtrend, it indicates a potential reversal of that downtrend. This is what they are talking about. Hammer, you see that it's very close to the doji, but this one has a body. It has a body. So buyers were able to, sellers were able to push the market all the way to the downside, but buyers came in and pushed the market to the upside, leaving us a bullish candle. See that it's a bullish candle. Remember, the color of the body too does not necessarily matter when it comes to this, but the body of the candle and the wick that is left behind is what we are looking at to confirm what the market is telling us. So what you have to do is you look at the body and the wick that is left behind. Remember, you don't have to only trade based on the hammer candlestick pattern. There are other confluences that you have to look at for before you take a trade. Now, as I said earlier, that the body of the candle does not necessarily matter, but what it represents is what you look out for. So looking at this, you see it opened and pushed all the way to the downside, but the market has been able to push, the buyers has been able to push back to the upside, leaving us this hammer formation. So the body, which is giving us hammer formation, is what we are looking at. Now let's look at the bearish hammer or bearish pin bar. This candlestick pattern is formed by a long upper shadow or wick with small body at the downside, indicating a bearish rejection from sellers and their intention to push the market down. So it's the opposite of the other one. It's a reversal candlestick pattern when it occurs or formed at the top of an uptrend. So as you can see, the wick of the candlestick is at the upside. That's indicating a bearish pin bar. But when it comes to the bullish pin bar or bullish hammer, the wick is beneath the body. Those are the things that you have to take into consideration. So you look at engulfing bar, you look at doji, we look at hammer, we look at Gravestone and Doji and Dragonfly Doji. So all those things are telling us what the market is doing or what the market is the language that the market is speaking. So you could predict what the market will do next based on the previous language, which are the body of the candlestick. Now let's look at this chart and see if we will be able to identify some of the bearish and the bullish pin bar that we've just talked about. So when it comes to this part, you see that here we have this hammer. This is a bearish hammer. When you move, let's try and identify some of them. We have another hammer here. Move. So on this side, we've been able to spot some of them, and we have another hammer here. The reason why I said you cannot just trade only those candlestick formation, you see, you have a bullish hammer here, and it moved to the upside for just a while, and all of a sudden it dropped. So you'd have to look at the whole structure of the market, where the market is heading, and at the level the market is before you take a decision in the market, either to trade or not. You also have a hammer here. So you can spot hammer all over this thing. This one is bearish, bullish, but you have to look at the direction of the market. So remember, I said when you're trading with the trend, or the trend of the market is your friend, so you follow where the market is going. Now let's go look at the bullish hammer. Some of them, we have some of them here. We have this one. We have this one. We have this one. So you can spot them out just looking at them on the chart. Try to identify them and know that this is what they are telling you. And remember, they can form anywhere, but the implications are different. And the market, there are market makers that push the market. So you'd have to be very careful in your decision on what to do. Now, let's look at the last aspect of it, which is the tweezer top and tweezer bottom. One of my favorite candlestick pattern. Now, when it comes to tweezer top formation, is considered as a bearish reversal pattern seen at the top of an uptrend. Tweezer top, when it forms at the top of an uptrend, it indicates potential reversal. The first candlestick is bullish, followed by equal size of bearish candle. The focus here is equal size of bearish candle. Now, let's look at an example. Now, this image is giving us, you see, the first candle is bullish, but the next candle is bearish, and they all have equal bodies. So this is tweezer top. Now, when it comes to tweezer bottom, it is the opposite. So the candle that is formed here will be formed at the top of an uptrend, telling you that this market is about to reverse to the downside. And when the tweezer bottom is formed at the bottom of a downtrend, indicating potential reversal to the upside, this one indicates a potential reversal to the downside. Now, that is why they are just opposite of each other. They are just opposite of each other. That is what you should take note of. Now, let's look at a diagram or a chart to spot some of these tweezer top and tweezer bottom. So as you can see clearly, we have a tweezer top here. So the market was moving to the upside. When this tweezer top is formed, all of a sudden the market push to the downside. And you could see that when a tweezer bottom is formed over here, market push to the upside. Remember, they will not have equal size, but you would have to look at the size of the candles. The first one open and the second one also the same size, almost the same size. Those are the things you have to look out for, like something like this, telling you that control has been gained by the sellers. You see, so we have tweezer bottom. When it is formed at the end of a downtrend, we call it tweezer bottom. But when it is formed at the top, we call it tweezer top. So these are some of the major candlestick patterns that you have to look out for when you are taking a trade. So you could add this tweezer top to your confluence, engulfing bar to your confluence, pin bar to your confluence, Then we also have Dragonfly Doji and all the rest. You have to look at what they are telling you at a point in time. So looking at this part of the market, looking at this part, we have Dragonfly Doji, Gravestone, Hammer, Twizzler Bottom. Everything is speaking here. So you have to consider the meaning of all of them before you take an action, either to buy or to sell. Those things are very, very, very important. So that is it about the candlestick patterns. Candlestick patterns. Before we end this video, please, if you haven't subscribed to this channel, do me the favor by hitting the subscribe button. As I said earlier, you hitting the subscribe button will not take anything from you, but rather it will help me to build on this community. So please just hit the red button for me. Thank you very much for your attention. See you in the next video.